as to what's what. The awesome value of life insurance. When loved ones come knocking, it's our desire to be there for them both in life and in death. Anybody ever said, I can't die right now, my kids need me? And they do. Absolutely. So what is they'll make it. Hey, she can say that because all hers are grown and gone. So that helps. But some people still got that 40-year-old living in the basement. Now I was joking. I had a gentleman come into my office. I changed his name to protect the innocent, Leroy Johnson. He came into the office 15 years ago, Miss Gaddis. He was 43 years of age, and he told me one thing. He said, I love my family. And I said, okay. He said, I work as a plumber. I take care of myself. But I want to make sure that if something happens to me, my family's going to be all right. Now, we always say something happening in our community, right? What do we mean by something? Right, we're talking about death, but we just don't want to use that word because they be bringing it to us a little quicker. So I said, okay, you love your family. How much would it take to run your household for 10 years? He said, $40,000 a year, $400,000. That's how we came up with the $400,000. I asked him, do you have any disability insurance? He said, no. So we added disability to his policy. I asked him if he could afford to pay $284 per month if it was meant that it would have some cash value that he could borrow someday against it. He said he could make that sacrifice, he would do it. So we put his kids on the policy here. So his kids were included on this policy. And 15 years later, he's got $28,000. Now, I've already done the math. He spent $51,000. Life insurance is like a house. When you buy a home and you mortgage it, you get a mortgage, what do you pay first? So on life insurance, you pay the cost of insurance first. So on a mortgage, you pay interest first. Life insurance, the cost of insurance first. So what's happening now is every time he makes a $284 payment, it increases cash value by approximately $280. So the cost of insurance, he's already paid it. So now he'll start to build cash faster and faster and faster. So life insurance, you pay up front, the cost. Mortgage, you pay the cost up front. So those are two things you pay up front, right? And there's another one, we'll get to it later. So, Mr. Johnson, for the most part, bought his policy, he got $400,000. Now, how many people, do you know anybody that's received more than $400,000 as a death benefit? Did anyone in the room know anyone that's received